BlackRock's Bitcoin ETF hits $1 billion AUM in 1 week. A watershed moment for crypto adoption. The world of finance witnessed a remarkable feat this week as BlackRock's Bitcoin Exchange-Traded Fund, ETF, IBTC, surpassed $1 billion in assets under management, AUM, within just 1 week of its launch. This meteoric rise marks a significant milestone for both BlackRock, a behemoth in the traditional investment landscape, and the embattled cryptocurrency industry. It begs the question, is this the inflection point for widespread institutional adoption of Bitcoin, and by extension, cryptocurrencies? BlackRock's entry, a beacon of legitimacy. BlackRock's foray into Bitcoin via IBTC represents a watershed moment for several reasons. The financial titans, with over $10 trillion in AUM, have long been vocal about their cautious, but optimistic stance on blockchain technology and digital assets. However, their direct involvement in Bitcoin, the most prominent cryptocurrency, lends an air of legitimacy and institutional acceptance that was previously lacking. Prior to IBTC, Bitcoin's acceptance within the mainstream financial ecosystem was hindered by several factors. Regulatory uncertainty, concerns about market manipulation, and volatility concerns kept many large institutions on the sidelines. BlackRock's entry, with its meticulous compliance record and risk management expertise, could pave the way for other, risk-averse institutions to follow suit. Investor appetite, diversification, or FOMO. The rapid inflow into IBTC suggests the strong pent-up demand for Bitcoin exposure among institutions. Several factors could be driving this demand. 1. Portfolio diversification. Bitcoin's unique price dynamics, often uncorrelated with traditional assets, make it an attractive diversifier for portfolios seeking to mitigate risk and enhance returns. 2. Hedge against inflation. Bitcoin's perceived scarcity and limited supply make it a potential hedge against inflationary pressures, a growing concern in the current economic climate. 3. Fear of missing out. FOMO. The recent surge in Bitcoin's price and the hype surrounding the launch of IBTC likely fueled some degree of FOMO among institutions, contributing to the rapid inflows. However, it's crucial to acknowledge that the current euphoria may not be sustainable. Bitcoin's inherent volatility and the nascent regulatory landscape present significant risks for investors. Challenges and uncertainties remain. While BlackRock's move is undoubtedly a positive development for the crypto industry, several challenges and uncertainties remain. 1. Regulatory hurdles. Regulatory clarity around Bitcoin and other cryptocurrencies is still evolving. Stringent regulations could stifle institutional adoption and dampen market enthusiasm. 2. Infrastructure limitations. The existing infrastructure for trading and holding Bitcoin might not be robust enough to handle the potential influx of institutional capital. Scalability and security concerns need to be addressed for widespread adoption. 3. Volatility concerns. Bitcoin remains a highly volatile asset. While this volatility can present unique opportunities, it can also lead to significant losses for investors. Institutions need to have robust risk management frameworks in place to navigate these volatile markets. Beyond Bitcoin, implications for the broader crypto landscape. BlackRock's embrace of Bitcoin has broader implications for the entire crypto ecosystem. It could 1. Boost crypto market legitimacy. Increased institutional participation can further legitimize the crypto market and attract more traditional investors. 2. Drive innovation. The demand for new financial instruments and services catering to institutional investors could spur innovation within the crypto space. 3. Fuel competition. With BlackRock entering the fray, competition in the Bitcoin ETF space is likely to intensify, potentially leading to more competitive fees and improved products for investors. However, it's also important to remember that Bitcoin's success story might not translate directly to other cryptocurrencies. Each cryptocurrency has its own unique value proposition and inherent risks. Institutional investors need to conduct thorough due diligence before venturing beyond Bitcoin. The long road ahead, an evolving landscape. While BlackRock's IBTC reaching $1 billion in AUM within a week is a remarkable achievement, it's crucial to maintain a measured perspective. The path towards widespread institutional adoption of Bitcoin and other cryptocurrencies is still under construction. Regulatory clarity, infrastructure improvements, and market maturation are all essential ingredients for this journey. However, BlackRock's bold move serves as a powerful signal of growing institutional interest in the digital asset space. It opens a new chapter in the cryptocurrency saga, one fraught with both immense opportunities and formidable challenges. Time will tell whether this is the start of a revolution, or merely another chapter in the evolution of a volatile and transformative asset class.